On All About Stocks this week, heavy damage to the Dalal Street, both the Sensex and the Nifty down 3%. We'll tell you what you should do now. Gaurang Shah tells you why you should be buying Axis Bank and Bajaj Auto for the long term. And we'll review Gaurang's own portfolio and tell you how he beat the Nifty by 3%. You're watching All About Stocks on ET now. Thank you for tuning in. We've had a rough couple of weeks in the markets. The RBI going against what was popular opinion and hiking those repo rates. The Fed taper weighing down sentiment as well. We've also seen a weak rupee and weak commodities to add to all of that soft sentiment. Now, over the next half hour, we'll tell you what your investment strategy should be when it comes to your long-term portfolio. Our email ID is at the bottom of your screen. Send in any question you might have about your stocks. Let me first bring in Ajay to give us an update on everything that happened this week and why our markets were down 3%. Ajay.
Well, Faye, no respite for Indian equities. In fact, Indian equities witnessed damage of about 3% this week on the benchmark indices. A couple of combination of factors which are weighing in. The first and foremost, of course, the unexpected rate hike of 25 basis point on the repo, which was done by RBI. That came as a bolt out of the blue and did hit sentiment on the street. And not only our own central bank, but central bankers across emerging markets like Turkey and South Africa, both of them hike rates. So suddenly the emerging markets central bankers turning hawkish is something which soured sentiment as far as equities and currencies across emerging markets is concerned, and Indian markets also took a toll. But if you look at the damage, it was the real estate sector as well as the bank sector which actually took the worst hit this particular week, because high beta trade was seen unwinding. So for traders, it was only selling on rise which worked. Otherwise, on long side they would have made massive losses. Also, the FI flows to the Indian markets have remained subdued, not only for this week, but for January as a month. The first month of this year has not been very kind as in terms of fund flows is concerned. A trickle only about 400 crores have come in. Otherwise, compared to the 16,000 crore which FI bought last month, which is December, or even January of 2013, we got 22,000 crore. So nothing coming in this particular week. Broader markets were also punished, and HNI and retail investors were seen booking profit, and that's why you saw big cuts coming in broader market stocks, which is mid-cap stocks and small-cap stocks in essential. Analysts say that traders were clearly seen shorting the market and Bank Nifty on higher levels, but this is exactly the kind of volatility one would need for long-term investors to start accumulating good quality stocks, because uncertainty around the overall global environment, along with on the rates front from RBI, could be short-term in nature, but for the longer term, we are still looking at environment which is relatively more constructive. 4-5 quarters down the line, we may actually see earnings upgrade coming in. In fact, the Q3 earnings which came in this particular week were mixed, but had shades of outperformance from select companies, and they were adequately rewarded also by traders. So this is a time to accumulate on sharp cuts, on declines, good quality stocks for the long term. That's what long-term analysts told us.
All right, Ajay, thank you for that update. Joining us today, Gaurang Shah, Vice President at Geojit BNP Paribas. Gaurang, thank you so much for joining us. In fact, your advice has been some of the most successful advice we've received on this show over the last 3 years. So I'm glad to have you here on this particular week. We're obviously in a period where rates are going up. We know the RBI governor is focusing very carefully on inflation, and this is painful in the short term. But do you see this as a positive move in the medium term? So for those of us sitting at home, tell us how to understand and how to read what the RBI governor is doing right now.
Well, Faye, I think, first of all, it's always a pleasure to be on the show, Faye. And the portfolio has been performing well. That's another soother. As far as the policy decision goes, well, like all of us know, a large section of the market was of an opinion that there's going to be a status quo, and the governor would possibly pause again at this time around and leave the rates unchanged. But a small section, close to about 5 or 10%, believed that there is going to be a small incremental hike, and that's what exactly happened. He did hike the repo rates by about 25 basis points. Now that actually did not go down well, and we saw the markets react on the policy day. But at the same time, it recovered also by the time the trade closed fair. So one should look at it from an angle that here is an RBI governor who's keeping his head on his shoulder and doing the things that he thinks is right and not what the North Bloc tells him to do. On the flip side, given the kind of elevated level of inflation, it is only prudent to think the way he thinks and not otherwise. So I believe that yes, we are in an era of high interest rates. we will possibly have to bear the pain for some more time. But no sooner you will see the core inflation data points coming to a comfortable zone, I don't think the RBI governor will shy away from reacting more aggressively when it comes to reversing those rates. So let's give him the benefit of doubt, and let's take into consideration that what he has done last time by hiking 25 basis points on the repo was the prudent move that he should have done, and we all think so. On the markets, well, I believe that from the point where we were in the recent times, the highs that we've seen, we've corrected percentage-wise, quite significantly in a very short span of time. And I believe that sub 6100 level on the Nifty spot is definitely a time to bring out your capital if you've kept it aside, and start nibbling into some of the sectors and stocks which is definitely going to be the theme for 2014. So, and of course, not to forget, in this correction fair, you had some sectors correcting sharply. So I look at it as an opportunity. And of course, in between, we had the additional $10 billion taper talk that was in place, and the Fed did, pull down additional $10 billion. That also reacted the markets on the negative side, with dollars becoming strong and other global currencies becoming weak. But I look at it from a medium to long term. I feel that this is the time to get into the market and not shy away from the market.
All right, so tell me this, Gaurang, if we are going to assume that all of the viewers right now are willing to hold on for the next 3 to 5 years, then there are things that are affecting our market right now. Inflation, like you named it, the Fed taper, the fact that we're going into elections this year, which means that politically and economically we're not really clear about how the year is going to play out. None of these things are going to get sorted out over the next couple of weeks. So what kind of volatility should we expect from our markets over the next year? What kind of a stomach should we have for those of us who are invested in the market right now?
Well, honestly, Faye, with the correction already in place on the Sensex and Nifty, one cannot rule out another 4 or 5% downside. This I'm talking about not before as we go into the election. And believe me, I am no expert to make a guess as to who's going to come and form the government, because the way things pan out right now, we only hope that there is going to be a decisive verdict, and a single political party, whoever comes, does have at least 200 plus seats to make a stable and take decision government kind of a scenario. Given the fact that we had a taper talk, we had credit policy, we had currency fluctuation, but compared to when we saw the first taper of 10 billion, this time around we are in a much better place. You have a rupee dollar equation which is more comfortable. You have an export data, import data coming in, which is again much more favorable, and our foreign reserves have actually shown an uptick rather than a downtick. So we are much better placed over there. In terms of corporate earnings, well, which is underway right now, the Q3, we believe that it has been by and large in line with our expectation and not negative. So there is an incremental positivity as we go further from here on. And with the correction that has already been in place on the Sensex and Nifty, 5% give or take, 5%, 4%, downside from here, definitely there is a base. So if you don't have a risk appetite of taking, just another 5% knock on your capital from here, then I think one should definitely shy away from the stock market if you don't have that kind of a risk appetite.
And as we reach the end of this earnings season, has there been anything in the earnings season that you've noticed, stocks or results that caught your eye that we might have missed?
Well, I think most of the results and sectors are in the public domain, and I believe mid-cap IT and some of the mid-cap pharma names, these themes have been there in place for a long time, and we continue to like them. Amongst the FMCG names, again, there are some of mid-cap FMCG names which have actually done fairly better than what likes of HUL have done or delivered in terms of earnings season. And then comes your telecom stock, because very recently we had the spectrum usage charges getting fixed. We had further guidelines coming in terms of the M&A activity that might happen over a period of time. So we do have a positive bias on the entire telecom pack, likes of Bharti Idea. We have been positive for a long time. We continue to hold out our view. And in terms of some of the names in the auto pack, given the kind of correction, I think names like TVS Motor numbers were good. Tata Motors, again, it has corrected. From here on, the downside looks very protected. We'll have month-on-month numbers coming early next week on the two-wheeler, four-wheeler side. I think that should also bring out some clarity.
All right, and you did mention IT, pharma, and FMCG mid-cap stocks. Could you give us a few names that our viewers can work with?
Yes, so starting with IT, Tech Mahindra, Personal System, Mindtree, CMC Limited. These are the stocks in the IT pack that we will be positive, along with the, of course, large cap boys. In the pharma, we've seen a correction coming into names like Glenmark, Lupin. We've seen correction coming into Cipla, Strides Acrolab, Divi's Laboratories. I think Divi's Laboratories will be coming out with the numbers on Monday, if I'm not mistaken. We again hope positivity is over there. Dabur, Marico, Godrej Consumer Products are the FMCG themes that we are following, along with Tata Global Beverages, if you follow that and take that as a consumption theme going forward. And in the auto pack, of course, everybody talks about two-wheelers, Bajaj Auto and the Hero MotoCorps, but I think in the recent times, last 3 to 6 months, TVS Motors has performed very well, and I hope that this improved performance will continue for the next quarters to come.
All right, so Gaurang giving us a large list of stocks that we could be focusing on, but the big takeaway for me has been the fact that we are going to see volatility going forward, and it's something we should be prepared to do as long-term investors. Let's take a few questions. Rinkin Shah has written in. He wants to buy these stocks. He's looked at Shobha Developers, Oberoi Realty, BPCL and Infosys. He has a one-year horizon. Among the list of stocks, Gaurang, he wants to know which ones he should buy. What would you recommend he does?
Well, I also believe that Shobha Developer, Oberoi Realty, BPCL. Let me give a disclosure over here. We do have a positive coverage on Shobha Developer, Oberoi Realty, and BPCL. But if I have to take into consideration in the last week or a fortnight correction that has come in, my advice to him will be to look at large cap stocks and some other sectors rather than what he has listed down. Of course, Infosys is, I would definitely advise go ahead and buy it. But other than Shobha Developer and Oberoi Realty, I would advise him to buy Axis Bank, Tata Motors, and L&T. And given the fact that they have corrected during the recent times, your downside is protected. And with a one-year time horizon, on a conservative side, at least 15 to 20% uptick is what you can see in a capital.
Time for a very quick break, but stay tuned. When we come back on the other side, Gaurang will tell you why you should be focusing on Axis Bank and Bajaj Auto right now. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Gaurang Shah is still with us as well. He's helping us figure out our strategy right now in this market. Gaurang has brought us two recommendations this week that he thinks make sense at current levels. The first of the two is Axis Bank. Now, we know that Axis Bank had very impressive numbers in its third quarter. Net profit was up 19%. But NPAs rose as well. Gaurang, also at current levels, while there's been a small correction of late, over the last 1 year, Axis Bank has run up a fair amount. What are you expecting from this stock going further?
Well, I think, first of all, on the slippages side, NPA quality deterioration, one should not be surprised because your economic and domestic data points, as far as the IIP or other data points are concerned, did not throw up a very rosy picture. And in that kind of a scenario, when you are in a business of banking, you do expect some slippages to happen. And it is after a very long time that some of these private sector banks have actually reported a marginal uptick in the NPA side. So I would not be, overly concerned with this small uptick. And I believe that if I am of an opinion, and like what the RBI governor said, going forward, inflation comes down, interest rates come down, then definitely the benefit will go to the entire banking pack. So we remain positive. The numbers were good, and we believe this run rate of good numbers will continue over the next quarters to come through. And as a disclosure again, we've just very recently upgraded our price target on Axis Bank to about 1390. And so I think the stock is trading at somewhere close to about 1150 or so. So if you have an opportunity right now, or wait for a dip, buy something now, add it at a correction, but definitely hold on to it. And we guess that this will be one of the leading private sector banks which will throw up very good numbers and will give a very decent return on investment.
Well, Gaurang, we know the government is looking at that Suti block deal sale which will happen on the 14th of February. What sort of impact do you expect that to have on the stock of Axis Bank?
Well, again, the Suti sale that will come through in form of a block deal, I don't know what the price it will be. It's very difficult to hazard any guess over there. But just in case, if it is below the market price, the cash market price, that will be a great opportunity to buy the stock.
All right, so that first recommendation was Axis Bank with a target of 1,390 from Gaurang Shah. The next recommendation is Bajaj Auto. Tell us why Bajaj Auto makes your list right now.
Well, again, the domestic market share is very decent. Numbers were in line with our expectation. Export market for the two-wheeler and the three-wheeler both together augurs well for the growth of the company. Like you rightly mentioned, in the next 3 to 6 months, we'll see whole host of launches coming from this particular company, and of course with its rival company, Hero MotoCorp. So we believe that the downside is very limited over here, and with the domestic market growth and the overseas market, I believe the targets of 2300 on Bajaj Auto will not be very difficult to achieve. And just in case, if the interest rate scenario eases off going forward, it augurs well for the four-wheeler, two-wheeler companies.
All right, we have a question from Ramesh. He has 500 shares of BHEL, which he bought at 139 rupees. He wants to know if he should hold on to this stock. Now, we know government is considering selling BHEL's stake to other state-owned firms this time. What's your call on BHEL? There are a lot of viewers who write in who are holding that stock, hoping for some sort of revival. Is it time to give up hope?
Well, again, it's a very risky proposition. Though this time around, the government has the wise mind to think that they are not going to come to the market and they will possibly make the other PSUs subscribe to this offer to increase the cross-holding. Now, that's a wise decision. But, again, to read into the government's mind as to what will be the disinvestment price target that they will possibly set is going to be very, very difficult. So he's one of the few gentlemen who's made profits in BHEL. My advice will be to take the money off the table. And in the cap goods engineering space, there is one more company which is available, which is extremely strong on the fundamental, has corrected in the recent times, that's L&T. If you move your investment from BHEL into L&T, you could easily look for a target about 1150 on it with a 12 months plus time horizon.
All right. So for those of you who've been holding BHEL for a while, hoping that it will recover, Gaurang, they're telling you that maybe it's time to cut your losses on that particular stock and move to L&T. Let's take a look at a portfolio. Now, we have viewers who send in their entire portfolio, as can you, and we'll take a look at all of your stocks and tell you what you should be holding on to. Shri Kumar is our lucky viewer this week. He sent in a list of stocks. He has 5,000 shares of Tata Teleservices, which he bought at 8 rupees and 50 paise. The stock ended the week at 720. Gaurang, when you talked about Telecom a little while ago, you didn't mention Tata Teleservices. What's your call on the stock? Should he hold on to it?
Well, firstly, I think I'll advise your viewers that please don't go and buy these single-digit, double-digit stocks in such huge quantities, because there is always a risk of your capital getting eroded to a great extent. And this gentleman has bought Tata Teleservices, and it got a whole host of other stocks which are into single-digit, double-digit, and quite a few of quantity. So first of all, avoid these kind of stocks. In case if you are wanting to take risk and buy into it, please keep in mind how much of loss you want to bear before you want to make any profits from them. Well, when I spoke about telecom, I did mention about Bharti and Idea, but this particular company, Tata Teleservices, there is not great future. The subscriber base has been shrinking. The circles that it operates is very, very limited. And of course, the numbers have not been anything that I would possibly, explore a positive fundamental call on this particular company. So my advice would be to sell off, buy into a DCB, that is a development credit bank. Numbers were excellent over the last couple of quarters. This time also the bank has performed very, very well. You can look for a target of 65 on this, but Tata Teleservices definitely exit.
All right, next on his list, 1,000 shares of Adani Power, which he bought at 38 rupees. Now, again, there's been soft numbers from this company, 9th consecutive quarter where they've posted a loss. What's your call on Adani Power?
Well, again, a sell, because power generating companies are not going to go anywhere, at least till the time you have, political parties aping what the Aam Aadmi Party does in Delhi. And there is always, linkages issues, and the numbers, like you rightly mentioned, have been on the downtick for a very, very long time. Exit, buy into a Tata Global Beverages and look for a target of 235 on it.
For 200 shares of KPIT Tech, which he bought at 182 rupees. Now, this company, on the other hand, management is sounding very positive. They talked about a very strong pipeline of deals, and they seem optimistic about the coming years as well. Would you recommend he holds on to Tech?
Yeah, this is the only stock actually in his portfolio which has a little bit of silver lining. So I would advise a hold with a target of 210. It's not going to be anything great from his acquisition price, but yeah, I remain optimistic on this stock.
All right, Shri Kumar, that's your list. Unfortunately, Gaurang telling you to sell most of the stocks but one on your portfolio. And if you want an entire portfolio, that's what we're going to do after this break. Gaurang designed a portfolio on this show, and it's beaten the Nifty by 3%. We'll tell you how. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Gaurang Shah is still with us, helping us work our strategies out for our long-term portfolios. Now, Gaurang designed a portfolio for us as well. It's given us an overall gain of 6.4%. This portfolio was designed on the 14th of December 2012. Over the same period, if we compare it to the Nifty is up about 3.5%, which means Gaurang has beaten the Nifty by 3%. And this is a tough market to beat the Nifty in. I'm going to give you a list of the stocks he's picked out for us. There's IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Wockhardt, Mindtree, Apollo Hospitals, IRB Infra, Kane India. And Gaurang, it's been such a good run for this portfolio, but would you like to make any changes there?
So from the entire portfolio fair, I would keep everything intact but for IRB Infra, though the company came out with its numbers and the stock reacted positively by about 3 or 4% uptake. But my acquisition price is much higher, and just in an anticipation of clinging on to something because it is making losses and hoping for a revival, that's not really auguring well for my portfolio. So I'm getting rid of IRB Infra, booking the losses. I'm switching into Eicher Motors.
Why Eicher Motors right now? We know that it's run up a fair amount in the last 52 weeks or so. Tell us why you've picked this particular stock.
Extremely promising, and of course we were just discussing the entire two-wheeler, four-wheeler pack, and here is the company which is having a decent amount of presence in the commercial vehicle segment. They have made new launches, and it has also got the Royal Enfield brand which is under its belt. And this particular two-wheeler segment that this company has actually been a great money churner for the company. We heard the management in the last couple of launches in this two-wheeler segment that they did, and of course we heard the management during the quarter-on-quarter number. And if you just look at the kind of growth prospects that the company is looking at, and of course the investment in the capacity that they already have in both the commercial vehicle as well as two-wheeler, this augurs well for the company and the growth going forward. So though in spite of the fact that this company has performed well over the last 6 to 12 months, I am willing to bite the bullet given the kind of growth promises and prospect that the company and the management has given out. And I believe that this is going to be bringing down my losses. It will cut my losses in the IRB, in my IRB Infra investment to a great extent, and I hope it will make it turn around.
All right, so that's one change in Gaurang's portfolio. A quick recap of the stocks in his portfolio: IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Wockhardt, Mindtree, Apollo Hospitals, Eicher Motors, and Kane India. Well, that's a wrap on All About Stocks. Gaurang, thank you so much for coming in on the show and sharing your ideas with us. We, of course, look forward to hearing from you and hearing your advice over the years to come. Keep sending in your stock questions, especially if you have anything specific you'd like to ask Gaurang himself. Our email ID is at the bottom of your screen, and you can reach me personally on Twitter. Thanks so much for watching.